Hey guys, I'm back. Are you there?
Yes, sir. Sir.
Okay.
Yes, sir.
Okay, so let's continue. Um, okay, so let's continue on internal control. Internal controls should be designed to prevent or detect and correct material errors or fraud within a timely period by employees in the normal course of their assigned duties. Okay. The cost-benefit relationship is primary criterion in designing internal control. So, of course, even if you wanted to employ as much internal control, if it costs more than the benefit, then you cannot employ that. That is, the cost of a control should not exceed its benefits, okay? Because it is impossible to precisely measure the costs and benefits of internal control. Both quantitative and qualitative estimates and judgments are used by management to evaluate the relationship. Let me give you an example. You do not hire someone, say, from a big firm like um, Ernst and Young or Grant Thornton just to audit a small store or a sari-sari store with an income of 10,000 to 20,000 per month because there's just a lot of cost and very small benefit. So there is always going to be the assessment of the cost benefit relationship. And of course, the benefit should exceed the cost of the control. Okay. Then you do not purchase like a very sophisticated IT system that would cost you millions if your operation is only about hundreds of thousands every month, right? So unless, of course, those hundreds of thousands would increase dramatically once you employ that system. So that's why there is an interplay between the quantitative and the qualitative estimates as well, and the judgments, okay, of the management to evaluate the relationship of the cost and the benefit. Okay, and then we also have the separation of duties. This is very important, and this is often not employed, especially in small businesses. But it's actually important for you as future accountants and auditors to understand the importance of segregation of duties. A proper segregation of duties requires that one person should not be responsible for all phases of transaction. And this is very important for you to know. Authorization, recording, and the custodianship should be separate. If you are the custodian, you should not be in charge with recording, okay? And you cannot be in charge of authorization. All right. Why? Because of course, if it is merged into one person, then he or she is susceptible for abuse, or he or she is functioning a function that is susceptible to abuse. Okay. Separate individuals should perform these incompatible duties. We call them incompatible duties. Okay? Hindi sila compatible. Okay? Sabihin mo sa kanya, hindi sila compatible. Meaning, kung nasa authorization siya na part, hindi siya dapat gumagalaw ng records. If nasa records naman siya, wala siya dapat custody. Okay? Or custodianship or custody. Okay? Um, and then we call it incompatible duties, okay, meaning they cannot be lodged or assigned to one person, okay, to reduce the opportunities for any person to be in a position to both perpetrate and conceal errors or fraud in the normal course of his or her duties. Kasi nga, if you are the one who's in charge in the recording and you also have custody and you are also the authorizing officer, how would everyone else know that there is something going on if you are actually perpetrating a crime or fraudulent act? So, because of the system of separation of duties, if one does if if the record does not match whatever is in custody, there is a way for you to check because remember, internal control is designed in order to detect, okay, errors or fraud in the normal course of the operation of the business. So again, this is very important for you to understand and for you to remember that if someone is in charge of custodianship, he or she should not have the authority or even the recording themselves. Of course, if you're the custodian, you can maintain your own records, but your record is not the one that is going to be followed. It's going to be the one who is actually in charge of the recording. Okay, and that is why, for example, in an organization, the disbursement of funds requires authorization. At the same time, there is custody and there is recording. Okay, the one who does the recording is going to rely on the documents that is being signed by the authorizing officer, and the authorizing officer forwards it to the recording person, and the recording person should match its record to whatever is in the custody. If there is any discrepancy, then that achieves the goal of the internal control, the detection. Hey, there is a discrepancy. We need to resolve this. What happened here? Okay, so where was the mistake committed? Is it a mistake in the record or is it really a misappropriation of an asset or say, for example, cash? Okay, so that's very basic, but it's not very common to all, especially if someone is in the business but has no background in internal control or in auditing, in internal auditing, or in audit and assurance. But as future accountants and auditors, you should understand this one. And we call these incompatible duties. Okay? Remember that. ARC, authorization, recording, custodianship. ARC. Okay? These are incompatible duties. Hindi sila pwedeng iisang tao. They cannot be as one. O, hindi sila pwede. Okay? Yan yung team song nila. Hindi tayo pwede. Basta authorization, recording, and custodianship, those are incompatible duties. Okay? Next, understanding of controls. According to PSA 315, when obtaining an understanding of controls that are relevant to the audit, the auditor shall evaluate the design of those controls and determine whether they have been implemented. Auditors' understanding of internal control may raise doubts about the audibility of an entity's auditability of the entity's financial statements. Concerns about the integrity of the entity's management may be so serious as to cause the auditor to conclude that the risk of management representation in the financial statements in such that an audit cannot be conducted. Pwede pala yun, sir? Yes. Yung pagtingin mo palang, my God, I don't think I can do the audit. Or maybe you can do the audit but it will require so much manpower, it will require so much resources, and you know that it is impractical for the company to spend so much, then um, you can disengage, okay, from the client because you cannot perform the audit that is necessary to be done. Also, concerns about the condition and reliability of an entity's records may cause the auditor to conclude that it is unlikely that sufficient, appropriate, and audit evidence will be available to support an unmodified opinion on the financial statements. So, mainly, medyo judgmental ka talaga dito in the auditor's perspective. Meaning ng judgmental is that you have your notion because you're trying to assess even beforehand, no? In your understanding of controls. In such circumstances, the auditor considers a qualification or disclaimer of opinion, but in some cases, the auditor's only recourse may be to withdraw from the engagement. Yan sinasabi ko kanina na disengage. Kapag hindi na kaya, bitaw na. 'Di ba? Oh. So, meaning, you do not express an opinion. You withdraw from the engagement. You know that it's really not possible for you to do the audit or that you cannot obtain reasonable assurance because there's just so much risks that you are no longer willing to take. Nax. Yun. Pero totoo yan. In the audit, because remember, when you're the auditor, you are also exposing yourself. Okay? Remember, you have your audit risk. That when you do the audit, even if you express an opinion as to the fairness of the financial statements, you still are at risk of committing a mistake, and that's what you call audit risk. If the audit risk is too high, you are no longer able to take, or you are no longer comfortable to take, then you will have to withdraw from the engagement. Or and sometimes though it will just not be an unmodified opinion, meaning there may be some qualifications in your opinion that in some of the items in the financial statements they are not there are no material misstatements, but in a particular aspect there is a risk of material misstatement, or you cannot express an opinion as to that item because of this and this and that. Okay, you will have to have an explanation for that. That is modified opinion. Okay, but sometimes it's just too much of a risk for you that you're no longer willing to take, and therefore you would have to withdraw from the engagement. So it's important for you to understand the controls, because the controls would actually guide you in planning your audit. Okay? And if the understanding of controls itself would raise a lot of doubts in the auditability of the entity's financial statements, then that will affect your decision whether to push through with the engagement and continue with the audit work, or even it will affect the opinion that you will express relative to the financial statement. So it's important for you to have an understanding of the controls. Okay. But I'm not saying that this cannot be cured. If there is really a lot of like risks in the controls, one of the remedies as well of the auditor is to increase the level of substantive testing. Okay? You'd have to obtain more evidence, audit evidence, in order to obtain reasonable assurance. However, even if you obtain a lot of evidence, and when you do the evidence and then, or you do a lot of substantive testing and then you find out that there's a lot of discrepancies and misstatements, it still end up whether expressing a modified opinion or a disclaimer. Okay, that you can no longer express as an opinion as to the fairness of the financial statements. Okay, you have to ask. Okay, so do you follow, guys, in the understanding of controls? Okay. This important concerns about the integrity of the entity's management may be so serious as to cause the auditor to conclude that the risk of management representation in the financial statements in such that an audit cannot be conducted. Don't disengage or withdraw ka. Okay. So that is important. Understanding of controls. How about evaluating the design of a control? So it involves considering whether the control, individually or in combination with other controls, individually or is capable of effectively preventing or detecting and correcting material misstatements. Okay, so effectively preventing or detecting and correcting. Okay, so those are the things that you need to look at in the evaluation of the design of the control. Okay, so prevent, detect, correct. Prevent, detect, correct. PDC, prevent, detect, correct material misstatements. That is the design of the control. That is the goal of an internal control. So when you evaluate, you would have to check if these are capable of effectively PDC, preventing, detecting, and correcting material misstatements. Okay, so as to the implementation of a control, the control exists and that the entity is using it. This is what I mentioned earlier in the um, discussion that you do not stop in the evaluation of the internal control insofar as whether there is internal control. You would also have to observe them actually implementing the control. Okay, the entity is actually using it. Okay, so again, it's part of the understanding of the control. The auditor should obtain a sufficient and understanding of internal control to assess the risks of material misstatements. Okay, through the auditor, though the auditor may become aware of the material weakness in an internal control, he or she is not required to search for such internal control weakness or deficiencies. Okay, what does it mean, sir? Though the auditor may become aware of material weakness in internal control, he or she is not required to search for such internal control weakness or deficiencies. Because your goal is to just know whether or not the internal control is strong enough to PDC, prevent, detect, and control. Okay? And correct. Okay, PDC. So, if there is a weakness or if does not achieve effectively the PDC, the prevent, detect, and correct, then there is a weakness. It is not required for you to actually search for such control weakness or deficiency. It is good if you know, but it is not required. The understanding includes knowledge about the design of relevant controls and whether they have been implemented. And the financial statement audit is not designated to determine the adequacy of internal control for management purposes. Your concern is whether or not one it's being implemented. So you've tested the controls and determine whether it's being implemented properly and whether it has achieved effectively in the evaluation. It has effectively achieved the PDC. What is PDC again? Prevent, detect, and correct material misstatements. Okay? So, what are the auditor's responses to the assessed risks? The auditor should perform tests of controls when his or her assessment of risks of material misstatement at the assertion level includes an exception that controls are operating effectively or when substantive procedures alone do not provide sufficient appropriate evidence to reduce the risks of material misstatement at the assertion level. Okay, so again, exception to the controls are operating effectively or when the substantive procedures alone do not provide sufficient appropriate evidence to reduce the risks of material misstatement at the assertion level. So what is the exception that controls are operating effectively? So there are deviations, no? So you'll have to check. Okay, that's your response. You have to test the control. Okay. So testing the operating effectiveness of controls includes obtaining audit evidence about how controls were applied at relevant times during the period under audit, the consistency with which they were applied, and by whom or by what means they applied. This is a test of control already, and this is you actually observing, testing, and performing the control, or actually testing if the controls are being implemented or apply. Okay, so one of the ways that you can do that is a walkthrough. That's why I said performing. An auditor traces one or several transactions within each major class through the transaction trail to confirm his or her understanding of the information system and control procedures. We call that a walkthrough test. Okay, somehow you are achieving the knowledge as if you are performing it, and you are testing your understanding of the control as well. Meaning, you will, what we usually do with walkthrough test is really walking through, meaning going through the process. Okay, walk through by the word itself. When you say walkthrough test, is you actually see the performance of the task or activity in order to check and confirm your knowledge or understanding of the control. So an auditor traces one or several transactions within each major class through the transaction trail to confirm his or her understanding of the information system and control procedures. So I select a certain transaction, and then I track the transaction if it goes through all the processes and procedures. So I will check if the procedure says it first has to be prepared by um, by the accounting staff. So I should see there is a prepared by, and there is a signature there that confirms that he actually has seen that document. And then there is an reviewer, so I should see that the reviewer also signed the document. And then if it says that the authorizing officer also signs the document, I should see the document there being signed. Okay. Or right now, if they're using an accounting system or an ERP, do I see the name tag under preparer for the preparer, and then the reviewer, and then the approver all went through in the system, and everything is there. Is it prepared timely? All those, to confirm my understanding of the control, will be in the walkthrough test. So you select a transaction and then you test whether everything is there according to their manual or their policy of control. Okay, that's a walkthrough test. Another um, ultimate purpose of assessing control risk is the ultimate purpose of assessing control risk at the assertion level for each material account balance or class of transactions is to contribute the auditor's evaluation of the risk that material misstatements exist in the financial statements. The auditor ordinarily assesses control risk at high level for some or all assertions when the entity's internal control system is not effective, and evaluation of the operating effectiveness of the entity's controls would not be efficient. So, um, two reasons for you to assess high level of risk, control risk. One is if the internal control system is not effective. Okay, maybe it's not being followed, it's not being implemented, or if you think that the evaluation of the internal control system's effectiveness is no longer efficient for you to do in your audit. So you just, to be safe, okay, in your audit risk, you will assess high level of control risk. Okay? So assessment of control risk is the process of evaluating the effectiveness of an entity's internal control in PDC, preventing, detecting, and correcting material misstatements. Control risk is assessed in terms of financial statement assertions. Okay? So documentation. The auditor is required to document in the audit working papers the understanding obtained of the entity's internal control and the assessment of control risk. When control risk is assessed at less than the maximum, the auditor should also document the basis for the conclusion. If the control risk is lower, okay, what is the relationship between ROMM, and the detection risk. Okay, and what is the relationship between the detection risk and substantive testing? It's an inverse relationship, so it affects your substantive testing. So you should document, okay, the basis for the conclusion of a lower or less than maximum, okay, of the control risk. All right. So that's for this topic, the first topic. Any questions? Okay, let's let me share that verse to you for this week. Suppose one of you wants to build a tower, will he not first sit down and estimate the cost to see if he has enough money to complete it, to be efficient and to be effective? Something that relates to our topic today. Yeah. Any questions?